So today we're going to take a look at my options tracker. We're going to update that as I did roll one of my positions and the other one did close. And then we're going to take a look at CRDO and see if there's an available option coming soon. Hello my friends, this is Legend. So today we're going to take a look at my options tracker, and then we're going to take a look at the charts, and we're going to see if we can understand where CRDO could be headed and if I can actually sell a call on CRDO to earn some money this week. So before we update this and take a look at the charts, if you don't mind, hit that like button as it would be much appreciated. So let's just go ahead and check out the charts first. So here we are looking at CRDO, and that's CRDO. And I've had this one for a little bit now, and I've got 100 shares that I've been selling calls on, earning some premium while I just own those shares. So let's take a look to see if it's going to give me an opportunity to sell another call. Well, as you can see today, we did have a red candle. Yesterday we had a green candle, and I was really hoping to see this one pop above this line, but as you can see, it did hit that line and got rejected. I'm hoping that this one can eventually get above this 115 to 116 area so that we can start moving back up. Now, can I or could I even just sell a call at the current time? And we'll take a look at the options chain to see what it would actually pay out. But just as an FYI, if my strike is closer to that actual price of the stock, then the premium is going to be better. The further away I am, the less premium I'm going to earn. So if you've seen my previous videos, you know I own those shares at 129 and the current price of CRDO is 112.33. Now I have been earning some premium, but I still want to try to sell those shares above 129 so that if they are called away, I still earn that price appreciation. So let's take a look at the options chain to see what it looks like on the option chain. And here we are. And you can see this is the list of all the expirations, and I've been doing weeklies on CRDO. So let's take a look at March 13th, and let's scroll right on down, and this black area right here with this red text, that's the actual price of CRDO. Now this is after hours, so keep that in mind when we're looking at the strikes and the premium that is being offered. Now since I own those shares at 129, I need to come down here and I need to go above 129 so that if I did sell these, I would sell them at a profit. So anything above 129, or technically even at 129, right? If I sold them at 129, I would not make any price appreciation, but I have been earning premium, so I would not lose money by selling them what I bought them at, but I still would like to earn a little price appreciation because CRDO does have high IV, so therefore it does move and can move quite dramatically. That implied volatility, as you can see right here, is 85.71%. So that is pretty high IV. So therefore, the premium on these are quite nice, right? Just for a week, we're looking at 338, 285, 272, 228, and all of that is even within a few dollars from the current price. But since I own them at 129, I have to come all the way down here. I'd like to sell them for at least $1.30. That would give me $1 price appreciation. And that premium that it's willing to pay out for that strike is roughly 38 cents. Okay, so times 100 shares, that would be $38 for the week. So that's not a lot of money, but still $38 for just a couple days. It's still money coming in. But what I want to see is CRDO moving closer to that 131. If CRDO can get past that hump of about that 116 area, then I can see it jumping up. And when it does, then that premium is going to increase. And when that premium increases, then I can sell my call at that same strike that's willing to pay me $38 right now can pay me possibly $1 or $1.50 or something like that. Really just depends on how much it moves. So it is a decision that you do have to make. And that's where my spreadsheet kind of comes into play. And this is my quick check for the call options, right? This is something that I'm working on, but it's a way to quickly see what percentage I can earn from the premium I select. So for this one here, we're just going to use today's date as the entry date. And of course, the ticker being CRDO, my purchase price. And I said I owned them at 129. My expiration date I was looking at was 3/13. So as you can see, there's only 3 days left for this option. And that's why $40 for a few days isn't really actually too bad, especially when the price is that far away from my strike. And that strike that I was looking at was about that 130 strike. And I believe it was 38 cents for that premium. How many contracts? We just had the 100 shares, so that would be one contract. So this is going to give me that estimated monthly calculated percentage that I would make on the money that I have invested. And when I hit enter, you can see we're at 2.99%. So if I were to bump this premium up, and if I can get, say, 40 cents, there's that 3% right there. So technically, I could sell this at about 40 cents or more and still earn my calculated projected monthly amount that I'm looking for of 3% here and get about 3.14%. Now, if CRDO does not make it up to that strike of 130 and it does go up, that's a bonus for me for next week, because if it's at a higher price next week, I can still sell that 130 or 131 strike and earn even more premium. I would push for the more premium instead of increasing that strike price, because say the price of CRDO, as you can see right now, it's down here at 112.33, right? That's the current price. But what if CRDO was at 128, okay? Just below my purchase price. Well, do I still sell a strike at 130 or 131 or something like that? Or do I try to sell it out to 137 or something like that, to where I can get more price appreciation, but I would get a lower premium? Well, for me, I would keep that strike closer to my purchase price so that I can get a higher premium. And why would I select a higher premium over that price appreciation gain? Well, it's simple. The premium is guaranteed and the price appreciation is not. Because if I select a 138 strike or something like that, and CRDO goes up to 135 and then drops back down to 125, well, I do not get those shares called away. But I still make that premium. But the premium amount would be much less than if the actual price of CRDO is at, say, 128, and I sell a strike at 131, and I earn a premium of, say, $3 versus, say, 50 cents, because I'm trying to get more price appreciation. And yes, if it does go above that strike, then I could indeed make more off of that price appreciation than I would off of the premium. But I would much rather go for the sure thing, and that sure thing is the premium. So as long as I sell it above my purchase price, that way I do get a little price appreciation, maybe $1, maybe $2, but I keep it close like that so that it pays a higher premium, because that is the guaranteed money. And if it doesn't make it to that strike, then I can just do it yet again and make another $3 the next week, right? So I go for the sure thing versus the potential of that price getting up to my strike. Now that is a preference and how you want to handle selling your calls. But for me, I would much rather select a strike that is closer to the price, but above my purchase price, so that I can earn more premium versus pushing that strike price out to a point where I could potentially make more in price appreciation, but the guaranteed money, which is the premium, would be much less. So for me, and in my opinion, I go for the guaranteed premium. So now let's just go ahead and update my options tracker and let's see where I currently stand. And here we go. Now CRDO, this one here, as you can see, had an expiration date right here of 3/6. This one did expire last week. Now I earned $2.05 off of this one, and that's what I'm talking about, right? The closer the price is to your strike, the more premium you can make. But this one here, it did not get to my strike price of 131, so this one expired worthless. Therefore, we can come right over here and we'll change the open to closed, and it expired on that 3/6. How much did it cost to close it? Well, it expired worthless, so it cost me nothing, therefore no fees. My shares were not called away because it did not hit my strike, and therefore my total earned on that trade alone was $204.94. And that was a 1.5% on just that trade alone. And that's a projected weekly earning percentage of 2.3% and a monthly projected of 9.66 and a yearly of 115. Now keep in mind, the weekly, monthly, and yearly are all projected out. It's basically whatever that percentage that I did earn, I'm just calculating that out to what that would be weekly, what that would be monthly, and what that would be yearly. Okay, so that is not actually what I made this year. That is just projected out because to me, I can think a little bit better monthly, or maybe I have a weekly goal of a percent that I'm looking for, right? So that to me helps to understand where that play kind of really sets in my mind. If I'm looking for a 1.5% or a 1% weekly goal, and I'm getting a 2.23% calculated out to that week, then I'm doing pretty good, right? So that's what these numbers here give you. And that's not so bad for 5 days in the trade, right? To make $204 in 5 days, not too shabby at all. So since that one is closed, let's just go ahead and we're going to make that one green. It's closed out, done, and it's in the books. Now for TJX, this one also was to expire on 3/6, and it had a strike of 146. And the current price last week was definitely above that 146. It still is. It's at 159.53. So if I did nothing, this one would have sold my shares at the 146, and I would no longer own shares of TJX. But I did decide to go ahead and roll it. I wanted to get that strike price above my purchase price, right? Even though I have earned more in premium than what I would technically lose off of selling at 146 when I bought at 146.25. Okay, I've earned more in premium, so I can definitely cover that 25 cents per share or $25 loss. Because as you can see on my first trade right here, I earned a total of $339.94, right? So that more than covers this $1.25 loss right here. And that's really what we're looking at, right? Because I originally had a strike of 145 and the purchase price was 146.25. So if they did sell at 145, that would be a $1.25 loss on that sell, but I earned $339. So that difference is what I would actually make on that trade. So in this case, I would sell them for less than I paid, but because the premium was paying, I would actually still come out in the good. But I did roll this one, and I rolled it out to 3.6 here and up to 146, okay? I earned a little premium, $16.94, very small premium, but now my loss between the trade is only $25 if it was to sell at 146. But I have rolled this one, And what did I roll it to? Well, let's first close out this trade, right? And then we will open the new trade. But we have to first see what I actually rolled it for, right? So let's take a look at my chart and my account to see what I rolled TJX out to and what I earned for rolling that trade. And here we are on my history, and you can see right here, top of the page is the TJX roll. And I earned a total of $1 for that roll. And that is times 100 shares. So that's $100 that I do earn on that roll. Now, what did I roll it to? Well, I rolled it from that 146, and that's that one that we were just looking at. That was that March the 6th that it was to expire last week. That was that 146, and I rolled it to $150 out to June 18th. Okay, so I did give them more time, but I got a price appreciation of an additional $4. Now, I probably will let this one just ride. I hope that it stays above the 150 and those shares are called away. That would be a nice little gain in price appreciation, and I still earn all of that additional premium. Now, before we enter that in, I do want to point out that this dollar is what I had entered in for that limit price, but it actually filled at $1.06. And let me slide over to show you what I mean. So if we look at this, you can see right here is that March 6th. And I had to buy to close this one, okay? So I paid $13.44, but then I sold to open the June 18th $150 strike, and that paid me $14.50. The difference between the two is $1.06. So that is actually what I earned, even though I put in a limit of $1, which means I want at least $1. But if the market pays more, they can pay me more, but they can't pay me less than $1. And when it went through, it actually did. It actually paid me $1.06. So we'll make sure to enter it in as making $1.06 and not the single dollar. All right, so we're back on my sheet right here, and we're looking to close this TJX. So let's just slide right over here like this, and this is the TJX that is open. So we want to close this. Now we are buy to close on this one because we sold to open, right? You got to do the opposite. If I sold it to open it, I have to buy it to close it, okay? So I'm doing a buy to close here, and I did it on the last day. So that close date was 3/6, as I closed it on the last day as it was to expire on that same day. The current premium to close this one, I did have to pay to close this one. And if you remember, I took a little screenshot right here. So if you remember, I had to buy to close this one at $13.44. So that is the amount I will enter in right here of 13.44. And the amount to close that was 5 cents. So therefore, it's going to show it as a loss, right? Because I only earned $16.94 over here, and I had to pay $13.44 per share. So that shows a loss of $1,327.11. But do remember, I did sell a call in that same trade, and that is going to offset this loss. But we have to close this one out first. So were my shares taken away? They were not, because I did a roll. So as you can see, that's going to show as a minus. These are all losses right here. So it looks like, wow, I have really just messed up. I lost out on that deal, right? Well, like I said, it's not over until we enter in the other side of that trade. That was the buy to close. Now we're going to do the sell to open. So we are going to open a new TJX because that was part of it. And we opened it on that 3/6, and that's for TJX as well. My purchase price doesn't change. I still own them at $146.25. So the actual trade type doesn't change. It's still a covered call. My strike did change from 146 all the way up to 150, if you remember. And that expiration date was rolled out to June 18th. Now, how much premium did I earn for this one? So let's pull that screenshot back up again. And there it is, that June 18th filled at $14.50. So premium earned is 14.50. How much did it cost me to open it? It was 6 cents. How many contracts? 1 contract. So now let's see what that total premium earned is. Boom. There you go. Now look at that. I earned $1,449.94 in premium for that option. Let's just go ahead and make this one open because that one is opened. We rolled this one, which means we closed one side of that leg and we opened the other side. I took a $1,300 loss on closing the previous, but made $1,449. So that difference is what I actually earned on that trade. So the difference between the $1,449 minus the $1,327 that I lost on closing it before is what I actually made, right? So I did not lose money on this. I rolled this and still made money. And if TJX does close above my strike of 150, then I also will earn price appreciation as I own those shares at 146.25. So that would be a total of $3.75 in price appreciation, or $375 on top of all of the premium I have earned throughout. So let's take a look to see how much premium have I earned so far since I've started tracking these options. And my first option I started was on January the 29th right here with that TJX. And my total amount that I have earned since then, so that's a little over 1 month, right? Because you might as well say that's February 1st, right? And it's March the 10th. So a little over a month, maybe close to a month and a half, and I've made $2,777 so far. That's a monthly projected calculated amount on my money of 14.4%. A very nice gain. A month and say 10 days, and I have made $2,777 just selling calls and selling puts. Now, once CRDO moves back up, I'll be able to sell another call and hopefully make a couple $100, and that is going to help push this on up. But each little trade and each little bit I do make, it just helps to increase the amount that I've earned. And in the end, that's what it's all about, right? It's all about making the money. But I do want to make sure I'm using stocks that I'm okay owning the shares of, because you have to be okay to own those shares if you're going to do this type of wheel strategy, right? So this is the type of spreadsheets that I will be uploading to my Discord very soon so that my Discord members can get access to this. They can track their own options trades just like they are doing with the high yield ETF tracker, which you can see right here. And this is my high yield ETF tracker. And it looks like it's up a little bit. We've got our gains up to 13,000 now. That's great. So all of this is live, right? It tracks and it's pulling that market price, and it's also tracking what your real price per share is. So as the day goes, you know exactly where you stand, if you're green in the play or red in the play. My high yield stock tracker sheet is available to my Discord members, and my options tracker will be available coming very soon. But if you would like to get a copy at least of that high yield stock tracker sheet and want to be ready when I do drop this options tracker into my Discord, then come on over, join the Discord, where you'll not only just get my stock tracker sheets, but you'll also get notified of options that I am getting into, what prices I'm selecting, when I get in and when I get out. As I do notify my members, not so much so they can follow along, but just to watch my journey. That Discord link will be in the pinned comments and down in the description below if you'd like to join. But I think I'm going to wrap it up right there. If you don't mind, hit that subscribe button and smash the like button, as it would be much appreciated. As always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, Legend out.